So, guys, like I was saying, the first scenario or the second scenario is already established. So, buyers are still, in control of the market. So, they were able to break the level, which is 245102.99. So, the price is still on the upside. So, the trade is still very much in play. So what we need to do is just to keep on watching on it, because as you can see, price is trying, is hovering around the 700 70% relative strength index. It's still an overbought. So right now all you need to do is just to wait and see. So some people will say, okay, let me enter a bullish trade. I will advise against that because the price is already overbought. So no cent trader will buy anything right now. So all you need to do, even if you want to, take a bullish trade, you need to wait for a pullback, and that is the pullback we are waiting for. You need to exercise patience. Patience is, very important in this trade. Don't be pushed to enter into a risky trade. So right now, taking opening a bullish position is so risky. So this might be a false break. So all you need to do is just to wait. So the best scenario is, like I said, is the 20 exponential moving average will be, going close to price. So when price cannot go up anymore, then price have no choice than to come down. So that is where you will have your trade, because these two, the price action and the 20 exponential moving average cannot stay together. It cannot happen. So what will happen is the 20 exponential moving average will be trying to get to the price action. So when they do and price cannot go up any further, then price will go down. So we just have to wait and see what will happen. So what you need to do is just to understand that another high has been formed. So what happened is that the price is making higher high. So that is what we call it. Price is making higher high. So when price break the first high, it made a higher high. So you just have to wait and see when sellers will enter the market. So when they do, it's a very great opportunity for you to enter, together with them. So that is why I say more people, they are very good risk takers. So they can enter the trade at the first sign of the bearish, but see what happened. Price was able to push up. So these people that are more risk, takers, so they are not gonna exit when price, make higher high, because they have, indicators to show them that price will surely come down. Because if you look closely now at the relative strength index, is the indicator is pointing down, showing that price will definitely go down. So if you want to enter the trade, I believe this is the best time for you to enter. So whenever price, tests back, like the first what we call it, the two white candle shows an overbought and the presence of sellers, then price usually sometimes want to test that level again, and that was what the price did. It tests and go up a little bit. So what usually happen, this is when professional trader from trader that are not professional or newbies. So what they will normally do, if price break the higher high, they they will they will get out of the market with a loss. But more experienced traders, we know that is a very difficult level for price to keep on pushing up. It's not that price will not push up, but it's a test of integrity. It's a test of your resolve. It's a test to know, the type of trader you are. So what you would do is just to hold on and see what price will do. But right now, all your guys is just to keep looking at the indicators. But if the indicator come down a little bit and price is coming down a little bit, and price was not able to break the 20 exponential moving average, you still know that price will try to make a higher high. So more higher high, but definitely what goes up must come down. But we just don't know when. But look at the reversal candles, and you see that more sellers are coming into the market. You just have to stay. So at this juncture, I will still pause this trade and start all over again maybe when the price break this level. So this is a short support right here. This is a very short support. So we believe that when price break this support and hold, and two things will happen: price break the support, and price at the same time break the 20 exponential moving average. Then we're gonna see more people will enter bearish trade. And then first of all, we would like to see price get here first. After breaking here, we want to see price break these two, then here. Then these are places you might consider taking profits. First is seeing that price break here, because you see the first time that price goes up and reach here, it kind of like come down a little bit, showing that this is a very strong support. So if price is coming down, you have to look at this level that I'm pointing this level. So another level you have to look at is this level. You see, it's another support. You have to look at it very closely. Then the next one is this level. You have to look at. So before you get to that point, you might have consider closing out on your trade. So right now we are seeing bullish intrusion, like the bull is trying to push down the wall. So the momentum. So this is what you need to be seeing. You see the momentum is coming in. So the sellers are pushing. They are pushing real hard. So there are more sellers coming in the market. This is a very good sign. So if you are more like you're not a risk taker, just wait. Wait until price break this level. Wait until price break this level, and that is what we are seeing right here. So price is breaking it. You don't just enter. Don't enter this candle that this particular candle that is doing the break. You don't want to enter this candle. So because it might retrace. So you let the candle close first and see if there will be a continuation of the break. So I'll wait a little bit for like 2 minutes and see what price will do. But don't enter at this price at that particular candle, the current candle. Don't enter. So if you want to enter, you have to enter at this candle after the close of the first white candle. But if you want to take a trade after the break of this level, just wait and see what price will do. So 1 more minute, another candle will appear, then we'll see what that candle will do. 1 more minute, another candle will appear, and then we're gonna see what that candle will do. But also, if you look at your relative strength index, it's going down. This relative strength index is going down. It's just unfortunate that I couldn't use my pen to point all these things out. But you guys, take the training, and you know what relative strength index is. It's the indicator below at the bottom of your chart. So you see the relative strength index is going out is at 52 right now, 51. So below 50, we know. Okay, so price broke the level. Price broke the level. Now you can enter the market. So while you are doing this thing, you have to do your analysis. You have to do your risk analysis and know how much risk you need to take on this trade. I don't have my calculator, but to do your risk analysis, you have to do 204 5 204 245 either 606 minus 243559. So whatever that gives you, you have to, depending on the money you have, you have to, know that is the risk you're taking. But we just take like 5%. So it's not that much. It's not much, but it should be around. It should be around 400 or 500 points. So you're gonna be risking like $5 if the size of your trade is 0.01. If the size of your trade is 0.02, maybe $10 at least. So finally, we're able to get here. So you have to understand that there is momentum. The bears are finally in control of the market. They are pushing the market down. So, buyers will be taking their hands off the market. This is now on a short-term basis. The seller's market. Remember what I said, on a short-term basis, the seller's market. So we're going to look at the first candle, this candle, the current candle, and see what the candle will do. So when this candle lifespan ends, we want to see if the next candle will continue going down. But that is what the market will definitely do. But like I said, the next hurdle, unfortunately, is this place. So when price was going up, price have difficulties breaking that level. It surely break it. That's the reason I can't use my pen to show you what I'm about to show. So when price get to this level, you have to come down before breaking it and make a higher high. So going down again, price might have hurdles breaking that level. So you have to pay attention at that level. But because there is, momentum, more sellers coming in, price might, have a very good, might be successful in breaking it. So there is momentum. So you guys took the training, you understand what momentum is all about. So this current candle has momentum, and we hope that it's gonna push the price down more. So in short, as we move along, we'll continue to do videos like this to analyze the market, tell you when to enter, how to enter the market. That way you will be able to understand price action and how price action is the best way to trade, and you make money comfortably. So we're gonna create a YouTube channel so that you will go to the YouTube and see some of the trading that we place. So this is a reversal trade. So when we do other type of entries like the bullish breakout, or the bearish breakout, or the range breakout, we're still gonna post a video to show you guys, how the whole thing happened. So we're gonna also take videos where the entry fell and what you need to do to absorb the risk, or to contain the risk. So it's called risk management, how to manage risk in case your trade fell, because a trade like this can fail, so, but a situation like this, I believe that price might be able, because all this thing is speculation. I believe that price will break this red line, because that is a kind of like a support. But if you enter the trade where you enter it, and you don't want to close it, you don't want to close the trade like right here, because it's too early. So what you would do is just pray and hope that price will break this support and push down a little bit more. So guys, I will still make a video to conclude this